Order submitted.
That is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis
Order canceled.
live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
A couple of minutes to go until the start of trade, cash trade here in Europe for equities. Gilts are about to open as well. It's going to be a big morning. We know that. Let's just kind of deal with what we've got so far. This is what S&P futures look like. We're up by 2.63%. US markets started sniffing out the fact that there was going to be a deal a little earlier. They had the opportunity to do so. But they're still only up by 2.64%. Europe's is going to open huge move this morning. And Europe has more energy exposure, therefore better energy outlook looks better for Europe, so you price it a little bit higher. So maybe that's what we're going to see this morning. But the S&P's up by 2.64%. You are going to get a bounce stateside. Let's deal with what we are expecting for Europe. Euro Stoxx 50 futures, 5.21%. FTSE, maybe not quite as much. It's going to be interesting to see what the oil majors do this morning. Looks like they're going to be under a little bit of pressure. The DAX, though, is up by 5.32%. One of the most sort of energy-intense economies that Europe has. Unsurprisingly, therefore, is going to benefit. But what do you do with the energy story? What do you do with defensives this morning? Energy is the only one that's really been up over the last few weeks. Do you sell that this morning and buy everything that's been beaten up? I don't know. Is that the trade, Anna?
Yeah, let's have a look at some of the sectors that are going to be in focus. As I mentioned before the break, nearly everything in focus this morning as we watch for this to ripple through these sectors. Airlines certainly in focus, hedged to certain degrees, but very much on the back foot as a result of the higher oil prices, as hedging can just take the edges off, if you like. So how much do they bounce this morning? How much of a retreat do we see for some of the oil majors? Those that focus on oil and gas, maybe there's the epicenter of the selling there, and that weighs on London. The mining sector in focus too. I would add into that list then, Guy, anything that is connected to the bond markets, anything that prices off bond markets, which is a lot of things, a lot of sectors, but real estate, utilities also in focus as these yields really drop today.
Absolutely. So here we go. Let's take a look at
Order
exactly how
submitted.
Europe's going to open this morning. What are the details we need to look for? Are the banks going to move? Big sector. Are they going to move off the interest rate story? What's going to happen with the energy sector?
Order
That's
filled.
Be interesting. FTSE 100 out of the gate, positive. Does it come a little bit higher? I think we probably are going to see it coming a little bit higher.
Filled.
We're expecting maybe 3% on the FTSE 100. Not seeing that quite yet. Stock 600 opening up 0.9%. I suspect this morning it may take a little while to get some of these
Order
markets
submitted.
open, to get a full picture of what is happening. It's going to be interesting to see how long it takes the DAX
Order filled.
to get going this morning, to get full pricing there. The IBEX is up by 1.25%. The FTSE's continuing to climb up by 1.4%.
Order submitted.
Do you believe this energy move?
Order
This is
submitted.
super long. They
Order
have to reverse,
cancelled.
but
Order
how
filled.
sticky is that trade? How much of what we see on the screen this morning is going to be real tomorrow and the next day and the next day, I think is a real open question this morning. Do you buy the rally or do you fade it this morning? Key questions. At the moment, the FTSE's up by 1.5%. The STOXX 600 is up by 1.4%. The IBEX is up by 1.2%. As I say, it's going to take a while to get things going this morning. We may not get the full picture for a little while, but we're expecting big moves to the upside. So far, I'm not seeing it, but I suspect there's some market congestion that we may be needing to deal with this morning.
Yeah, absolutely. Plenty of markets still closed, not getting the full picture on the CAC, the DAX, all the AEX, some heavily weighted companies, of course, there. We do have bond markets in focus and gilt yields dropping just like the rest of Europe, down 20 basis points at the 10-year horizon. We're down 22 basis points at the 2-year horizon. So, as I say, across the curve, and as we've seen elsewhere in Europe, rolling back
Order
the
submitted.
high yields of yesterday and doing more than that. So we are certainly focused on anything that is connected with bond markets. Just looking at the other sectors, Guy, where we are seeing early gains, and certainly construction and materials. So that sector is the best performing, was fast out of the gates. Some of these building businesses, construction businesses, very reliant on energy prices, material prices, of course. Personal consumer discretionary, grocery stores, that's another sector where we're seeing quite a bit of positivity. So something more positive for consumers being factored in there, perhaps. Only one sector in negative territory so far at this early stage of the trading day, and no surprises for guessing that that is energy. It is down by 0.4%, but there are a host of stocks that are not yet open, it seems, across Europe. And so with that in mind, we wait for this to really sort of set firm.
The OMX is the only market that I'm seeing on my screen at the moment that is delivering the kind of performance that I originally anticipated we would see first thing this morning. So the OMX in Stockholm is up by 4%.
There are many companies not open yet.
I just wonder how long it's going to take to get this thing going this morning.
Yeah.
FTSE's up by 1.5%. IBEX is up by 2, nearly 3%. But as you say, I think there's going to be a real congestion story this morning. At the moment, I've got 140 unchanged on my screen at the moment. So we've got 440 up, this is the STOXX 600, 22 down, but we've still got kind of 130. So it could take a while for this market to deliver.
And if those are the ones that are going to be the biggest movers with the most attention to them this morning, then we could be in for some big moves. Technology, now the best performing sector, up by 3.5%, and we see Infineon Technologies up by 9.7%. And this was an interesting feature of what we saw through the Asia session. The Kospi really jumping, some of SK Hynix, some of the other AI-related companies, and of course there's an energy component to it, but they weren't sold off necessarily because of their exposure to the Strait of Hormuz. They were sold off because they'd done so well in January, February, and now they bounced back this morning, and we see some of that coming through on these markets.
Shell's down by 8.5%. Siemens is up by, which I just need to check which Siemens to make sure that I'm looking at the right one. Siemens Energy is up by sort of 10%. So we're seeing either end, you're getting some quite big moves. Do you just buy what you sold and sell what you bought? Is that the trade? Let's
get some perspective then. Henry Allen joins us, macro strategist at Deutsche Bank Research. Henry, very nice to have you with us. What a day for stocks. The DAX just opening up then, 5% higher this morning, which is the kind of performance we were expecting, really, based on what the futures told us. I mean, is this a good... do you buy this? Is this a dip we are buying this morning? And if so, how long does it last?
I think we can be confident because I think what Trump has done overnight is really open up that de-escalation pathway with the 2-week ceasefire. And obviously the hope for markets is that it won't just be 2 weeks, that he'll extend it beyond that. And something I was struck by, and we've been writing about consistently, is even before this ceasefire, this oil shock was never really hitting the severity of several past oil shocks. It wasn't hitting the severity we saw in 2022, let alone what we saw in the 1970s. Indeed, even before the ceasefire announcement yesterday. The STOXX 600, S&P 500, only down 5 or 6% from record highs. This was not some huge bear market by any means. And I think one of the reasons for that is consistently investors were expecting there would be some kind of reversal. If you look at the energy futures curve, yes, front-end Brent prices, for instance, were around $110 a barrel. But if you look at 6-month Brent, even beforehand, that was around $82 a barrel yesterday, come down to $77 today. So there was a $30 gap between front-end pricing and what people were expecting in 6 months' time. So implicitly, investors pricing in a temporary conflict that was going to unwind. So the fact we've now kind of opened up that pathway, I think we can take with some confidence.
Yes, it does seem as if analysts, very quick to declare what we all think we know about President Trump's reaction function and what's important to him with the political realities that loom on the calendar and say, well, this is going to be short. Yeah. But I just wonder
Order filled.
Is that the whole story? I mean, do we, if
Order
President Trump
filled.
wants to step away, oil prices don't necessarily go down to $60
Order filled.
do they?
Not necessarily, but I'm conscious that with Trump, investors have been caught offside repeatedly. We've seen several of these moves where suddenly we've had this big risk-on surge. We saw that in January, a smaller one, when we had the Greenland reversal. People were worried, was the US going to annex Greenland or something? And then all of a sudden they've announced a framework deal. The risk-on tone comes back. Those tariffs he threatened on Europe were avoided. We saw an even bigger one last year with the 90-day tariff extension, about almost a year ago exactly, when suddenly the S&P was surging 9.5% as it looked as though we'd avoid that global trade war. So we've seen several points where Trump has done the risk-off move. We've done the de-escalation. We've then had the risk-on move, and actually generally those have been sustained. We saw after the tariff reversal indeed last year that that was then met with further de-escalatory moves. And Trump has said himself he wants to reopen the Strait of Hormuz, get that oil flowing. For now, markets are still not back to their pre-strike levels, so that actually implies that if we did get back there, oil prices have further to fall.
Do you not think that the market will say, this could change quite quickly, and therefore, just as a hedge, I need to put in not zero geopolitical risk into the oil price, I need to put $10, $20 in. So what is the difference to the earnings outlook if we're at $80 a barrel versus $60 a barrel, just in terms of the growth impact that $20 might imply?
It should, but one thing, firstly, at the end of last year, oil prices were already at their lowest since 2021. We were at a low point with $60 a barrel. We've been coming down progressively.
5-year average is 73, I think.
Yeah, so we're not actually a million miles away from what a lot of companies have been used to. And the other thing is that Trump's incentives, as we've seen repeatedly, not just with Iran, but with other things like Greenland, like tariffs, like central bank independence, are geared towards a resolution, to getting energy prices down. Gasoline price in the US right now are above $4 a gallon. They're the highest they've been in either of Trump's two terms. We know that US consumers are much more exposed to stock market performance. That's been a point of vulnerability. Of course, we've got the midterms coming up. His own approval ratings have been falling. So all the incentives are geared towards a de-escalation here. Trump, even yesterday when he was threatening the comments about civilization, he was still couching that in terms of, I don't want to do this. So, it's clear that, again, Trump does not want an escalation here.
Do you think he can get oil prices back down? Let's call it the 5-year average. You think he can get them back down to $70 a barrel?
That's partly dependent on what Iran do as well, but I think that's certainly the aim. Yes, I'm not saying we're out of the woods yet, and something that we need to remember is that oil price at $95 a barrel, yes, they're down from 110, they're not down to the original point of 70, but this is at least giving space for central banks to not then respond with incredibly aggressive rate hikes. Yeah. It's giving us time.
But
at the end of the day,
growth impact won't there?
There will, but oil prices have only been at these elevated levels for less than a month, really, just over a month. You'd need to see that sustained over a period of 6+ months for that to have meaningful growth implications. We're not talking about recession or even kind of serious downgrade at this point. We're talking in the realms of 2, 3, 4 tenths at this point, and that's if it's sustained. Already we're coming down today. So, actually, if you also look at the data we've had so far, even covering the month of March, the strikes began on Feb 28. If you look at the data even for the month of March, it's been okay, all things considering. Even in Europe, more exposed to the energy shock, the PMIs, yes, they slowed a bit. Still in expansionary territory, actually, the composite PMI being upgraded a bit from the flash yesterday. US jobs report, the ISMs, still very, very positive, covering the month of March since the strikes began. We're not seeing some huge push to contraction. We're not seeing the data downgrades we saw back in 2022 when Russia invaded Ukraine and oil was up to $120 a barrel. And indeed, another difference to 2022 is that in 2022, people were pricing in a sustained oil shock. The 6-month Brent futures were above $100 a barrel. We've never seen that today. Investors have never been pricing in a sustained oil shock.
Order filled.
Henry, you're making me feel better, so that's good. That's all very positive. I was a bit concerned earlier that we would start to see downgrades, profit downgrades, stock downgrades, almost as a result of a little bit of certainty being introduced into markets. Because if you're an analyst and you can see energy prices have gone kind of crazy over the last month, and you need to do something about that, but until things settle down and you can make a rational argument as to what your new assumption is, it's quite difficult to kind of get that through. So I then wondered whether we're going to see downgrades from here. Given how little time we spent at $120 oil then, do you think we actually are not going to see too much of that?
I think it's going to be pretty limited, assuming we get the ceasefire path along the broad outlines that markets and other analysts expect. I think if oil prices, I think we spent around 3 to 4 weeks around the $100 a barrel mark, and actually partly because futures have always been at the lower point, and lots of companies do base their prices off 6-month, 12-month futures and stuff. That impact didn't hit everyone anyway. So a lot of that flows out the Strait of Hormuz. It was still taking some weeks before they got to their final destinations. And I think so long as it is a month, a lot of people will look through that. Yes, clearly it's a shock.
What happened with Bloomberg? Someone is super deep on the beat, but it's falling and the tape is so calm.
On concerns about rates going higher in the wrong direction, that story could start to be changing and could be bringing a lot of the optimism that we're seeing related to this ceasefire news that's sweeping through the markets today.
Charlie, thank you very much. Yeah, that relationship between rates and banks has been complicated in the month of March. Charlie Wells with the latest on some of those stocks that are moving. As we were just hearing from Charlie, coming up, are there blue skies ahead? Airlines take off on the ceasefire between the US and Iran. We hear from the head of the airline industry's global trade body and discuss the impact on aviation next. This is Bloomberg.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
This spring, Bloomberg House arrives in Miami, set against one of the world's most electrifying sporting stages, where business, investment, and culture converge, and where the future of sports, media, and technology comes into focus. Experience Bloomberg journalism come to life, powered by real-time data and the conversations shaping what's next. Bloomberg House Miami, April 29th and 30th. Connect with context.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
Order filled.
See that the most watched video from your show had fewer views than the average Mr. Beast video. And I don't know what that says about the state of the world, but
I think it says Mr. Beast is kicking ass, is what it says, yeah. Well, you know what? There is a big difference. When you do the show every night, you're not going to get as many views. But we still, I mean, I woke up this morning, there were 2.2 million views of my monologue the night before. So for everyone who says late night is dying, it's just not true.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We hopefully will see some flow of oil return, which will be a positive. So the airline industry has been impacted by both the supply of crude, but more importantly, the supply of the refined product, because a lot of jet kerosene was refined in the region, and that obviously is dependent on reopening the straits as well.
That is, of course, the IATA Director General, and we should note, incoming Indigo CEO Willie Walsh reacting to the news of the two-week ceasefire between the United States and Iran. Airlines, of course, consume an awful lot of fuel. They are highly exposed to what happens with the fuel price, with the jet price. And unsurprisingly, this morning, what we are seeing is a very big bounce in the European names. So IAG, Air France, Lufthansa, all bouncing strongly from here. Let's talk a little bit kind of what happens next. And I think that probably is the question a lot of airline CEOs are going to be asking themselves right now. Let's join Bloomberg's Global Aviation Managing Editor, Benedict Kamel, who joins us from Berlin. Benny, good morning. It is unsurprising to see the airlines bounce back this morning. They are going to like a cheaper jet fuel price, but are they going to get a cheaper jet fuel price?
Well, they probably will. The question is whether consumers will also get cheaper tickets. What you have seen is a reaction on the price side. As far as the consumer is concerned, you've seen these fuel surcharges. You've seen extra cost on baggage. We only had yesterday Delta announcing that. And that's probably something that will remain in the market for the foreseeable future. We just heard from Willie Walsh there. We've heard from other airline executives saying, not so fast. Yes, this is good news, but you can't just sort of swing the pendulum back via a single tweet, as it were. So this will take time to find its way and work its way back through the system once companies have gotten used to higher prices. And remember, the demand is there. There's still strong demand out there. The bookings are strong. So once you've locked in these higher prices, and you see people still buying the tickets, it'll be very hard for companies to sort of pare them back. So I would wager that over the next couple of weeks, you will still see these higher prices, particularly as we head into the peak summer travel season.
And what does this mean for the operators in the Middle East then, Benny? Because they really have reshaped the long-haul industry in recent decades. Qatar Airways, Emirates and the like. I mean, what are we expecting? How quickly are we expecting them to return to full force?
Again, it won't happen overnight. If you look at the last 5 weeks since the war started, they really pared back operations almost to zero and have slowly started coming back up. But remember, a lot of these aircraft remain grounded. Qatar Airways has quite a few aircraft sort of out of position. They've stored them in places like Spain. They have to bring them back. They have to bring crews back. And importantly, they have to bring back the story, the demand picture that people still want to travel through this part of the world. Do they want to be stuck there again? There is that concern. So that'll take time to get people back, to rebuild the reputation, as it were, of these airlines. One way to do that, speaking of prices, will be via lower fares. So if you're looking for low fares, that's probably the place to go. Emirates, Qatar, Etihad, they will all try and bring back demand through lower fares. But remember, the other airlines, you mentioned Lufthansa and Air France and so on, they've also not sat still. So they have pushed more capacity into the market, into routes like Asia and so on. So sort of unwinding all of these sort of changes, that's going to take a while, probably into the summer and if not beyond.
Benny, for a while it looked like maybe the US carriers were going to have an advantage. They would have access, availability when it came to fuel, to jet, and that was going to potentially work in their favour. Does that go away now? And what message do you think Ed Bastian delivers today when Delta kicks off its earnings?
Yeah, so as you said, Delta will have their earnings today, midday, and it'll be interesting sort of how bold the company might be in terms of its prediction. Will they issue a proper forecast? Might they refrain from one? That's something we'll be looking out for. A couple of weeks ago, a lot of the airline executives came together in Washington, D.C. for a big conference, and the mood was really quite jubilant. The demand was there. The people were booking. Some of it might have been sort of booking quickly now before fares rise. That's the big question, whether people still rush to buy these tickets now. And, you know, as I said, the demand still is there, but it's an advantage that the US airlines have had for a while that might go away fairly quickly.
Y sí que es cierto que sabemos todos cómo están las cosas en Madrid como para poder conseguir un piso, y además por él también adopté un gato. Entonces él me dijo en todo momento que no me preocupara porque mientras yo estuviese estudiando la carrera me podía seguir quedando en la casa y que en el momento en el que terminase la carrera y ya tuviese mi carrera profesional y trabajase, pues ya me buscaría una vivienda en la que estar, pero que mientras tanto pues que me podía seguir quedando en el piso. Estaba estudiando la carrera.
They seem to be very much alive and well, Neil, in fine form. So what are traders saying? The DAX just 5% higher this morning. What are traders saying? What are you hearing?
First thing, obviously, clearly a relief rally. The move that we've seen in the markets this morning, we've only seen these kind of moves above 5% for the stocks on 4 previous occasions in the last decade. 3 of those were during COVID, and another was during the Ukraine-Russia war in 2022. So the first thing is, one investor said to me this morning that in the short term this market remains untradeable. A second basically mentioned that what we've seen in terms of hedge funds is a massive degrossing of their exposures. If we think about what happens in degrossing, that is when a lot of the time the risk managers take control of those books and reduce the leverage in those books. Are they suddenly going to regross, if you like? Are they going to suddenly increase those exposures? I think that's unlikely. This is a pause. This is not an end to the troubles in the Middle East as we see it. If the choke point has been over the Strait of Hormuz, Iran basically has that under control. Will Israel remain the ceasefire? So many of these questions are being asked today. Now, the trend followers, the CTA funds, which are very much momentum-based, but we're hearing from traders this morning that they were effectively long energy and short equities. So you're going to see certainly a bounce based on a reversal of that short-term effect. Then on the other hand, if you talk about momentum and with them being so quick and moving around so quickly, the other thing to remember is that to quote a classic phrase, that momentum often is following of sheep. And to quote Gordon Gekko, from that film, of course, sheep get slaughtered. So be careful in terms
La
of trying to follow
conexión
these
se perdió.
short-term moves.
As the CTAs come back in and reverse some of those positions, but are there levels I need to think about? Are there levels I need to watch out for that will push them even further, that will drive this rally on?
Yes, we had some data that came through this morning from some of these chats with traders talking about Goldman saying that these CTA funds at above 6740 on the S&P and above sort of 6800 will see a sort of 50 billion of equity demand to buy, push up potentially to 200. So that's a 4x increase to follow that trend in the short term. So at the index level, you may well see sort of the macro funds, etc., buying, but underlying, what have we seen in the last couple of weeks? Certainly for MSCI World Index, we've been trending at below average volumes. So that suggests that active managers, real sort of the money managers, aren't deploying capital at the moment. And I think until we get a longer term solution scenario, and we're coming into earnings season to see whether we're yet going to see impact in terms of outlooks, will remains to be seen, to be fair.
Thanks, Neil. Thanks for the update. Really appreciate it. Bloomberg Senior Strategist Neil Campling, figuring out what's going on this morning and how far we go. What are we going to talk about next? We'll get back to the fundamentals in some ways, try and understand what is happening on the ground. Sanam Vakil from Chatham House is going to be joining us next. Is this situation sustainable? What does the situation after look like? What does the Strait of Hormuz look like after? What does Iran look like? All of that coming up next. This is Bloomberg.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets. Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using
Order filled.
rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity
Order
markets.
submitted.
Been hearing that there was going to be an activist at some point. The question
Order
is who?
submitted.
It's a convergence of technology and national security.
The United States is a big country.
Order submitted.
Playing in the Northeast, that's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the
Order
Bloomberg
submitted.
M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just
Order submitted. Order cancelled. Order submitted. Order cancelled. Order filled. Order submitted.
Interest rates have moved very rapidly. Are the banks going to respond to that? The answer we already now know is yes. Big chunk of the European equity universe. Downside, Shell's down by, let's call it 7%. BP's down by 8%. Freight rates, do they come lower from here? Probably. That would seem to be a logical conclusion.
Order filled.
Today is AP Moller
Order filled.
2.1%, Anna.
Let's get an update, Guy, on some of the other news flow that we're covering this morning. Moody's has cut the outlook on the flagship fund of private credit giant Blue Owl Capital to negative. The rating firm moved the outlook on Blue Owl Credit Income Core from stable after, quote, significantly higher than peer redemption requests in the first quarter. Macro hedge funds struggled in the month of March as the war in the Middle East upended inflation
Order
expectations,
filled.
leading
Order
to
submitted.
losses at many of the industry's largest firms. Sources say Saeed Haider's Jupiter fund lost about 12% in the month of March, and Bloomberg understands the Brevin Howard Master Fund fell 6.6%.
Order
the worst
submitted.
monthly loss in its 2-decade-plus history. And ship owners are working to understand the fine print of a US-Iran ceasefire that could temporarily unblock the Strait of Hormuz and open an exit for more than 800 vessels trapped in the Persian Gulf. President Trump earlier said the US will be, quote, helping with the traffic build-up in the Strait of Hormuz. The ceasefire buys time for the US and Iran to potentially reach a longer agreement to end the 6-week war. Let's get to Bloomberg's Jumana Besetchi with that in mind. She is in Dubai for us. And Jumana, so far, is the ceasefire holding? What do we know about the durability of this ceasefire?
Yeah, well, it was a bit hit and miss in the early hours of the morning. I will say that even after the ceasefire was announced, we still saw a barrage of incoming projectiles being directed at various countries in the Gulf, including Israel as well. So that has subsided. And I think now there's a combination of feelings in the region. Number one, relief that we've averted the very worst case scenario. And of course, President Trump's announcement vis-a-vis the ceasefire came about 90 minutes before that deadline in which he had threatened to unleash destruction on Iran's infrastructure. So a relief that that outcome was avoided. But at the same time, perhaps a little bit of skepticism about the durability of the ceasefire and whether it can actually translate into something more permanent. Now, overnight, the Iranian National Supreme Council put forward their list of terms of what they would like to see in order for this to turn into a longer-term cessation of hostilities. And there's still very maximalist demands. And one of them is essentially maintaining control, maintaining sovereignty over who passes through the Strait of Hormuz. And this is clearly a non-starter for many nations and Gulf nations in the region. Other maximalist demands include the U.S. removing their sites, their bases from the region, war reparations, assurances that the war won't happen again, and another one including that all operations on their proxies in the region need to stop as well. So many of these demands are unacceptable, and indeed, we've heard from the Israeli Prime Minister this morning, and he said that while they subscribe to the U.S.-Iran ceasefire, they do not subscribe to the fact that the ceasefire should be all-encompassing and that their war with Hezbollah will continue. So still a lot of questions about whether this is going to translate into something more permanent, but for the time being, a step back from the brink, and of course, for the foreseeable future, no threat of imminent escalation.
What do we know about the talks, Jumana?
Yeah, well, the chief mediator here was Pakistan, and we know that there was a huge last-ditch attempt to get these diplomatic channels working with success. And, shortly after President Trump put up that Truth Social post, we also heard from the Pakistani Prime Minister as well. He then extended an invitation to all parties to attend an in-person meeting in Islamabad in the next few days. And a short while ago, the Iranian state media actually reporting, and this is state media, I should say, but they are saying that Ghalibaf will lead the delegation from the Iranian side. He, of course, is the very outspoken speaker of the parliament. He's also been very active on social media, very strident and critical of the United States. And on the other side, they are also reporting that J.D. Vance will be leading the discussions from the United States. Overnight, a lot of the reports suggest that J.D. Vance did play a seminal role in getting this deal across the line, the ceasefire agreement across the line, alongside China. President Trump actually did credit China in some comments this morning. He suggested that China actually put a lot of influence, a lot of pressure on Iran to come to the negotiating table. So again, some hope of a more substantial diplomatic breakthrough, and it seems as though those talks actually are going to go ahead later this week in Islamabad.
Joanna, thanks for the update. Appreciate it. Joanna Basechi joining us out of Dubai. Let's talk now to Sanam Vakil, Middle East and North Africa Programme Director, joining us from Chatham House. Good morning. Is the conflict over?
Good morning.
Good morning.
The conflict is paused, and that's just because the negotiation is set to begin on Friday, as Joanna laid out, but really because both sides have still quite maximalist demands, and we have to see how much room for compromise there is between the two negotiating positions. This is a welcome pause. This is a war that nobody was winning. All sides have come out much weaker, but I still remain cautious because Iran's demands are really quite extreme, and it's hard to see them coming out having achieved everything.
Do you think the Straits of Hormuz returns to the free-flowing nature that we saw before the conflict? Do we go back to that? Do we not go back to that? What does the new reality look like?
Well, I think that's the key question. And if the Strait of Hormuz does not go back to the status quo before the war, then obviously I think this war has a chance to recommence at any time. Iran knows it has its leverage and can always exert that leverage. This will all depend on what kind of guarantees Iran obtains from the United States. Is this ceasefire going to become permanent? That is one of the most important demands that they're asking for. They do not want to see a repeat of this war. Secondly, what they are also looking for is so-called compensation or sanctions relief or access to their frozen assets. If Iran has economic lifelines that can help lower the sort of demands on the Strait of Hormuz. Iran is going to be isolated in the region. There is no return for Iran to the ties it had with its neighbors, particularly on the Gulf Arab side specifically. So that's important to remember. And if those conditions, if Iran is extracting a toll on the Strait of Hormuz, that is going to perpetually harden Gulf Arab views of the Islamic Republic.
Good morning to you, Sanam. Can I ask a bit more about the different factions within Iran, the hardline factions versus the reformists, to the extent that it's possible to identify who's in charge of those right now? As Joanna was telling us, the speaker, Ghalibaf, on the Iranian side, according to Iranian media, is going to be leading the delegation in the talks. What does that tell us about, does that tell us anything useful about the extent of what Iran will be asking for here?
Well, in terms of who's in charge, I think right now it's important to see the Iranian system as institutionalized, and they rely on a sort of consensus decision-making process. So Ghalibaf is probably out there as a key figure because he's well-known. He's a regime insider. He's conservative, but also pragmatic, and has close ties as a former member of the IRGC. So he brings together a lot of different elements from across the Iranian system. He will not make decisions on his own. He will take, I think, what's on the table back to Tehran, and I think we will see a lot of back and forth. The state and health of the supreme leader is still very unknown. There are reports, of course, that he's incapacitated, but we should see this very much as a structural decision-making process rather than an individual that is in command and control.
And what about Iran's proxies in the region, Sanam? How much sway will Iran have over them and how they respond at this time? And we keep in mind, of course, Israel has said that it does not consider this to be a ceasefire on the Lebanon front.
Yes, that's an interesting demand on Iran's side, looking to shield Hezbollah and the Houthis from further strikes. I think that demand is really unachievable. And if Iran goes ahead and cuts a deal with President Trump and leaves the Hezbollah front vulnerable to further Israeli incursions and strikes, that will say a lot about the dynamics between Tehran and these proxies. Ultimately, I would imagine that the Islamic Republic will prioritize its own interests, but that is, certainly going to be a sticking point, and one that Netanyahu has already made clear is not connected to the process in Islamabad.
Sanam, how much sway does Beijing have in Tehran right now?
I think China has certainly played a very important behind-the-scenes role. I think that they pressured Iran or convinced Iran that as of right now, it has increased its leverage through the control it exerts over the Strait of Hormuz, and this was the right time to come to the negotiating table. So China also just vetoed a resolution at the Security Council, and perhaps this was part of the quid pro quo. China would support the blocking of that resolution, but would encourage Iran at least to come to the negotiating table. And we should see this as a first step. This is a pause. This is not a final settlement. We can all celebrate when this is done based on the terms and conditions of the deal.
Sanam, this is a pause then, not the final deal. But if we look ahead a little bit about what we try to project forward, what we have learned from the last 6 weeks or so, this war in Iran. And I'm thinking here about if we look through the lens of great power rivalry and we think about the US and China, and picking up from Guy's question about China, to what extent has thinking about the US and China changed in the region? And there might be quite a nuanced answer there, I'm not sure.
Well, I think it's important. Remember, we're still in the fog of war without a settlement. I think we're getting more details out about how this war was planned and organized. Analysts like myself for the past 6 weeks have been critiquing the planning of this war, that President Trump entered this war on faulty assumptions, certainly convinced by Prime Minister Netanyahu, and the New York Times has released an important story confirming this. I think certainly people around the region are looking at the execution and the prosecution of this war and wondering what it has achieved. This was, remember, only meant to be 4 or 5 days, and in the 6th week there has been a huge amount of damage, economic, human costs that we haven't really calculated yet, and relations across the region have been set back, I would say, by a decade, if not 2. There is deep mistrust, and so countries are looking at the United States, I think, and wondering what has been accomplished beyond all of this damage. And it looks like President Trump is cutting and running. He really wanted this deal, and he wanted to extricate himself from this war. So I think this will raise questions. But it's also important to remember that China has played a behind-the-scenes role. China hasn't done more than that. China didn't swan in to support the Gulf states in any way. Either it sort of managed its own side negotiations with Iran, and that sort of leaves the region caught up in a great power rivalry without any of its own off-ramps and with limited tools to manage conflict that is imposed by external forces.
Sanam, thank you very much. Thanks for bringing us up to speed with your analysis. Sanam Vakil, Middle East and North Africa Programme Director at Chatham House. Coming up on the programme, we'll take a closer look at the outlook for oil as it plunges below $100 a barrel on the ceasefire, temporary as it might be, at least for now, in the Middle East. That is next. This is Bloomberg.
Equity indices built on opinions. That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets. Equity indices.
Not like this, but 100 more is how much is the movement? 100. Like 60% of the move. So 700. Yeah, more or less here should be good. So I am gonna close. I wanna adjust a bit. And I am gonna close. Gonna just another time. Adjust. Okay, let's go. Thousand. This is like 5,000. Okay.
Order submitted.
I am putting orders to leave the desk and start doing other things. Oh. The euro is fucking me. The euro is. Yeah.
Order filled.
The euro exit. Sad. Was looking good, but not. but not enough. Looks like I'm gonna get fucked by a high frequency trading here, algorithm. Look, tuk, 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 tuk. Considering that I'm gonna leave the screens, maybe I made the stops wider. No, like that. Nah, it's good. 200, 200, 200, 200. Funny in English. 200, 200 to 100. Okay, all is gonna be fine. So I'm gonna leave the desk and start studying a bit.